Introducing our team members.
Assalamualaikum warahmatullahi wabarakatuh to all my friends and lecturer. My name Sania Haifa binti Muhammad Rosli and these are my group mate.
My name is Nur Jannah binti Azizul Adzani.
My name is Shabil Aiman bin Sansa Amri.
My name is Muhammad Katami bin Azhar.
Want to present for our assignment for subject MAF503 about SME in Malaysia. Do you guys know about SME before this? If no, I will tell you guys. Small or medium-sized enterprise or SME are business with revenues, assets and employees that fall below a certain number. However, there is not an iCloud global definition of an SME as it varies across different countries and sometimes even industries. In this video, we will cover everything you need to know about SME in Malaysia and the role they play in our country. SME definition is the economy has undergone various developments since 2005, such as price inflation and change in business trends and structures. Therefore, the definition of SME has been reviewed and a new one was sanctioned at the 4th National SME Development Council NSDC meeting in 2013. A business can qualify as an SME if it meets either one of the two specified criteria, namely sales turnover or full-time employees, whichever is lower.
Let us see what is the criteria for sectors in Malaysia to be qualified as SME. Firstly, manufacturing business, which refers to physical or chemical transformation of materials and component into new product. It will be SME if sales turnover not exceeding RM50 million or full-time employees not exceeding 200 workers. As for service such as restaurant, hotel, entertainment and private education and other sector include primary agriculture, construction as well as mining and quarrying become SME if sales turnover does not exceed 20 million ringgit or full-time employees do not exceed 75 workers.
Okay, next I want to tell you guys about financing problem of SME. The problem is limited access to financial resources. This section discusses the demand side issue associated with obtaining financing. One of the most significant challenges that SMEs face is limited access to financial resources, particularly during the seed, startup and growth stage. Most research on SME financing identify the background of SME borrowers, fund availability and accessibility as key factors shaping the SME funding gap. This study broadens the discussion by looking at other key elements arising from information asymmetry issue. One statement already said that 35% of respondents admitted that they could not obtain any financing due to lack of collateral, complicated application process, high interest rates, and lack of credit history. A common theoretical argument for the finance gap is information asymmetry, which leads to credit rationing by bank lenders. Information asymmetry occurs as a result of imperfect market conditions, relatively low level of credit accountability, compounded by poor bookkeeping records, the absence of credible collateral, a lack of transparency, and risk associated with the specific markets in which SMEs operate. Small loans are risky, so the SME market segment is considered high risk by fund suppliers. Banks are hesitant to lend to SMEs because they perceive them as their riskiest client with the potential low profit margins and high transaction costs when compared to large firms. This insufficient collateral among SMEs not only leads to higher interest rates on loans but also pose a significant barrier to expanding SME credit. Traditional financial institutions, such as banks, often require collateral to secure loans, yet many SMEs struggle to provide tangible assets or property, especially during their early stages. This limitation severely limits their ability to access loan and line of credit, hindering their growth potential. In stark contrast, multinational companies encounter a much lower rejection rate, with only 7% of their financing required being declined. This discrepancy underscores the challenges SMEs face in securing financing compared to large corporations.
Poor cash flow presents a significant financing challenge for companies, reflecting lower creditworthiness in the eyes of financial institutions. Cash flow serves as a critical metric in credit assessments, and consistent negative cash flow can lower a company's credit rating, thereby complicating its ability to qualify for loans. This issue often arises due to rising costs of raw materials, lack of automation, and reduced revenue, all of which contribute to cash flow constraints exacerbated by weak domestic demand. How poor cash flow impact SMEs? It significantly hinders SMEs in securing loans due to their inability to meet repayment terms. When financial institutions do consider financing such SMEs, they often impose stringent conditions to mitigate risk, such as demanding additional collateral that SMEs may struggle to provide. Moreover, high financing costs arises as SMEs fail to generate sufficient cash flow to repay loans properly, classifying them as high-risk borrowers. This situation can lead to delayed payments to suppliers and employees, straining relationships and potentially disrupting the supply chain, further complicating their ability to secure necessary financing. Next, the reason poor cash flow impacts SMEs' ability to secure loans. It's primarily because lenders require assurance that borrowers can consistently meet repayment terms, including interest and principal payments. A lack of adequate cash flow suggests that the business may not possess sufficient liquid assets to cover these regular financial obligations. Consequently, even when loans are granted, lenders often impose stringent conditions to mitigate the heightened risk associated with poor cash flow. These conditions may include higher interest rates or the requirement for additional collateral, making it notably more challenging for SMEs to secure the financing they need to sustain or grow their operations.
Now, we are looking at the role of government to supporting SME during and after COVID-19. The government main objective and focus for SME development is to support the development of highly competitive and resilient SME to enhance their contribution to the economy. The focus will be placed on promoting high technology adoption, talent upskilling, innovation and research and development to transform this industry into producing high value-added product and service, expanding global markets and attracting quality investment. Automation and Digitalization Facility ADF main mission is to encourage SME in all sectors to digitalize operation and automate processes to increase efficiency and productivity. SME Corporation Malaysia look for a change that by providing SME owners with guidance and financial assistance. SME Digitalize is by easing the financial strain through grants. Bank Negara Malaysia announced that it is allocating an additional 700 million for the SME Automation and Digitalization Facility ADF. The facility total size is now 1 billion ringgit. Open to all Malaysian SMEs, the ADF has a maximum financing amount 3 million ringgit maximum for each SME and maximum financing tenure of 10 years. The financing rate is up to 4% per annum, including the guarantee fee. The financing can be used to help purchase hardware, software and other IT solutions and services in addition to equipment and machinery. SME Corporation Malaysia also support the digitalization of SME through a web portal called MyAssist MSME, created to help SME find solutions for their business-related problems. The objective of Agrofood Facility is to provide financing for SME to increase agrofood production for Malaysia and for export. The allocation of the Agrofood Facility has been increased by 500 million ringgit, resulting in a total allocation 2.5 billion ringgit. The maximum aggregate amount of financing under this fund is limited to 5 million ringgit per SME and enjoy a financing tenure of up to 8 years from the date of the first drawdown. The financing rate is 3.75% per annum. applicable to Malaysian businesses and to any individual Malaysian citizen owning at least 55% of the share in the SME. The fund shall only be used for working capital or capital expenditure for the development of agri-food projects, such as for purchasing machinery and equipment, or for the renovation costs for owner-occupied business premises. Loan deferment by all Malaysian banks. Loan deferment is the deferment in conventional loans and Islamic financing repayment obligation for individual or small and medium enterprise. SME Corporation, Malaysia, reduce installment to accommodate a person, situation and financial needs if their loans or financing are not in area exceeding 60 days and is denominated in Malaysia ringgit.
Continuing from my first previous presentation, I'm going to talk about the role of finance institution to help SME during and after COVID-19. Realizing SME have a potential to become a large market of customer, the finance institution help SME with the agenda in mind. One of the specific measures taken by the financial institution is SME Bank, an agency under the Ministry of Entrepreneurial Development and Cooperative MEDA, which offers special financing with the maximum amount of 1 million ringgit under the Program Special Relief Facility Fund by Bank Negara Malaysia for SME which affected by the COVID-19. The Special Release Program is useful to the SME as the financing maturity is 5 years with low interest of 3.75% per year with no need for collateral in the form of working capital requirement. The financing program can be requested from SME Bank from 6 March 2020 to 31 December 2020. This effort is also being welcomed by CMB Bank, which offer Payment Assistance Program (PAP). The PAP allow the SME's owner to choose their own payment plan, which have been structured and rescheduled, or to follow the option given by CMB Bank based on their current financial strength. This allows the SME owners to avoid a harsh penalty and interest charges, which will be accrued and accommodated immensely as they cannot fulfill their money installment by giving the SME owners opportunity to reduce their monthly commitment. In the end, all of this action will be useless without any positive result. Despite many challenges to implement the special measure, the program proved useful to the SME. From the perspective of effectiveness, we can measure it with the growth of SME. SME managed to bounce back from 2020, the worst year for SME, with a growth of -7.3% to the positive growth of 1.6%. The drastic change in 1 year can be credited to the successful program implementation by the financial institution who take their part along with the government in the recovery of SME. In conclusion, the SME market is an opportunity that should not be a waste. Despite vulnerability as a result of the SME foundation itself, which mainly originate from small capital and experienced owners, SME can be one of the dominant market force in Malaysia to push for a sustained and the growth of GDP of Malaysia.
That's all from us. Thank you.